Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not investment advice. So this video is another video where I gonna this makes part of a new series. And but before I'm gonna start this, I have to show you the ebook stuff. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description. And in the description you will find also the link to the Facebook group. Join the Facebook group, don't miss it. So this series which I'm starting now is the trade school series, yes, where I'm going to show you in high frequency trading, those trading which I have doing. And when I'm trading those kind of when I'm doing this trading, I have no time to explain you why I took a trade, because I entering one trade after another. And that's the reason why I'm doing now this kind of video, where I'm gonna explain you exactly why I have done a trade and why not. Yes, and that because now I have more time and I will show you this. So I have done this trade here. Look at this, it was a trade in the money here, yes, you see. And why I entered in this kind of trade. And I'm gonna show you now exactly why I have done this trade. So important is to know in this kind of scenario, and I will explain those trades, exactly all of my trades, so which I have done on the in the online trading playlist. Yes, that are almost 40 videos, and I try to explain each and every trade, so it's more clear why I took this trades. And so I use also the weekends where I cannot trade because there is I do not have OTC market yet, and I have no, and the market is closed at the weekend. So I use this time to explain you exactly why I took the trades, and that maybe will improve your trading. So okay, let me see. First of all, the important thing is here that is nothing else than a one deviation. Here's the one deviation Bollinger Band, the one deviation pullback. Yes, you see we got here already a pullback of the one deviation with the fake breakout. This is a fake breakout. You see price because it's a diagonal, yes, it looks like this, yes, and but at the end it's the same thing like a fake breakout, which I have explained in my ebook about the fake breakouts, yes. So we have here already the first pullback, then price get again to this level, yes, and you see here we got here a spinning top high wave candle, yes, something like this. And this kind of candle was already showing indecision. That means the 200 is here, the 100 is here, the 50 is here, and the 20 is steep going up. Yes, that is a nice sign that there will be or a trend change. Yes, because the trend is at the max. Yes, or it will be a pullback, and that is what I have explained in the ebook. Look at this. Here we have the crossing of the 20 SMA and the 20 EMA, or in other words, the crossing of the middle Bollinger Band with the 20 EMA. Yes, and that is, I have explained this, if they are getting wider, and this is also explained in the ebook. Watch at the ebook, there is explained this. So if they are getting wider, we have here a wide, that is the max of the trend. Yes, that means we have here the peak. We have the peak of the trend. That is the max uptrend what is possible. And as soon price gets closer, narrowing, as you see here, this is getting together, converging the 20 SMA or the middle Bollinger Band and the 20 EMA. Yes, that means the trend is stalling. The trend is losing momentum. Yes, till the point where price will hit this level here, yes, where it's crossing. And then there are two things which can happen. The first thing is price could reverse from this level. That means price will go down. That would be, this candle would be a red one. Yes. or price will pull back. So, and because we got here this kind of indecision candle, the probability is that there will be a pullback in this kind of constellation of EMAs, yes, is much greater, yes, than that the price would continue to going down, yes, because we have already had this kind of pullback before. Yes, that means in this clear sense, if this here, this context here would be greater red candles, yes, a great huge candle, it would be much more probably that after the reversal there would be happening a reversal in a trend, and then I would not do a call here, I would do a put, yes, because a huge candle in this kind of situation breaking through the 1 deviation Bollinger Band would mean that the downtrend would continue. Yes, so and that is the explanation of this trade, and I will show you now another trade because I tried to cover almost one video exactly completely. So let's see what happened here next. So I think that was already clear here. We have here also some kind of support and resistance area, yes, but that was after I saw the rejection from this level. I entered into this kind of call because I expected a continuation of a reversal, a pullback of the 1 deviation Bollinger Band, only because I saw the alignment of the EMAs, the crossing here, yes, of the EMA and the middle Bollinger Band, yes, which shows me that there could be now a reversal or a pullback. I have explained this exactly in the ebook, yes, and because we got here already weaker and weaker candles, yes, this candle here was showing me still that the downtrend would continue, yes, that is what I have explained so often. This candle was showing me that the trend would continue, yes, and you see the next candle was a red one. This candle was not saying me anymore so much, yes, but this candle here was a clear sign that there could be probably coming up a reversal or a pullback of this minor downtrend. And after the rejection of this candle from this level, I understood that price would go up. So let's see it now. We are getting to get the next trade. So after this, you see a sharp movement upwards, yes, and then price comes back again. Yes, I wait till price comes back. Yes, so you see I'm with the mouse moving around, waiting, telling you that we got here some kind of engulfing candle. Yes, then price came back to this level. Yes, and then I entered into this trade. Yes, and after this trade I'm gonna explain you how, why I took this trade. Yes, and this is also one of those trades which I have explained in my ebook. That is the pullback of the EMA or something else. I will show you this after this trade so that you can understand exactly what I mean. So let's see. Yes, I will do pause. So that was the pullback, and that is what I have explained here. You see, we got here a trend, an uptrend, and then we got here some kind of reversal. Yes, and that is what happened. And then I entered into the continuation of this uptrend after the pullback. So let me show you this. We got here a downtrend, then we got here this pullback, yes, this pullback, and then I entered in the continuation of this pullback. And that why? Because we got here something here, this kind of engulfing candle, yes, this kind of engulfing candle with combination of a pin bar, yes, at the key level, at this key level into this kind of uptrend here. You see, we have here the alignment which shows you a strong trend, and in this situation you see also, yes, let me show you this here at this level, that the 50 the 20 EMA and the middle Bollinger Band, or better the 20 EMA, which is much more, the yellow one, which is much more faster moving, is not pointing down. Yes, it's not pointing down. That means that the trend is still up. Yes, and they are getting more wider from each other. That means that we get here now again a much more getting stronger trend. Yes, uptrend. And that is the reason, yes, why I entered here into this trade, because I saw this kind of engulfing candle. The first movement was really fast till this level, so I waited till price came back to this level, yes, because I understood that the movement of this candle should be greater than this, greater than this, be here at this level. I was already really sure that the next candle would be a green one, yes, because we got here this pullback, and that pullback doesn't happen here for fun, yes. If you look everywhere, you will see pullbacks are not in such kind of uptrend are mostly not only holding for one candle, it's mostly more. Yes, you see, you got the pullback and then you have one candle, pullback and one candle. Here you got a consolidation area. Yes, and so here you should be aware of it, yes, because there are no candle signals, yes, which would showing you this clearly, and no rejection, yes. Here it was already a rejection from this level, like I have explained in the ebook. Yes, I have explained this so often in the ebook, how to trade the engulfing candle. Yes, and that is a bullish engulfing candle, and that's the reason why I entered here into this trade after, not immediately, but after the price got back to this level. Yes, that is what patience is about. Yes, you have to wait till price came back to this level to get the best possible entry point. And I promise you that this trade would be out of the money only because if I would have entered immediately on the starting of the next candle, because the first initial move was sure above this level here, yes, where this candle retraced at the end. That is why most traders gonna lose. They lose because at the end price retrace below the entry point, because they were not patient enough to wait for the best possible entry point. So let me see if I can show you another trade. 1 second. Okay, so I will do now here play, and then you will see the next trade. So you see here how I understand. Yes, that is what mostly is important here, that you have to expect almost, if you see such kind of consolidation after constellation, after such kind of uptrend, that there will happen. Wait, I have to do a pause here. After this kind of uptrend, you have to expect in this kind of relation at any level. Wait, I will wait till the next candle will appear. So 1 second. Till this, you see, I'm explaining there's something. Yes, but the important thing is this, what's happened here. So, okay. If you have such kind of uptrend, I will draw this. So if you have some kind of uptrend like this, yes, and the pullback here, which is giving that is something like, I would say, the last tentative here, the uptrend, the last tentative of the buyers, yes, because we are here already in a long uptrend, yes, and then there appears again a pullback here, another pullback here, yes, and that means, and I told you already that this one here would be almost, that was already a sign that the price could go down further after this crossing here, yes. And I have explained this also often. If price is moving far away, yes, that means at this levels, yes, you have to be aware. Yes, at this levels, you have to be aware that there could be at any time a reversal. That means you need evidences. And one of those evidences is a nice pullback, a nice rejection, yes, is an evidence, yes, but you have to understand also the EMAs, yes. If you have such EMAs and they are heating up, yes, and there is no squeeze, here is a squeeze coming now, yes, and there is no squeeze before, yes, you can expect that there is enough space between the 1 deviation and the 2 deviation Bollinger Band to unfold those kind of candles. Yes, you see here the distance here is nice to unfold. It doesn't unfold in this great movement. Yes, also here, this is the distance here. Yes, from the 1 deviation, that is what you have to look at. Yes, if you have a great distance between those, that means that at the end, price would have the space to unfold. So if you have something like this, yes, you can expect a pullback, yes, but after this, so I will remove them again because I'm talking now about this kind. If you have such kind of movement here, you see, you can imagine a line like this, yes. Below this level, always if you get some kind of wick or something like this here, which is already showing you here, yes, that it could be that we didn't reach this level here again, yes. You have to understand that this level is nothing else than a resistance area, yes, and then all reversals, yes, all reversals which will happen here, yes, below this levels are the first sign that there could be a double top forming. Yes, it's the same similar if you have it below. Yes, from the other side, on the opposite side. That is what I try to explain here. Yes, that if you have such point, you have to check if the next candles, yeah, are going to cross this level here. Yes, this level which I have drawn. If they are not crossing and they should come up some reversal, yes, and that kind of candlestick is a reversal, yes, you got here an engulfing candle. Here we got first of all a bullish engulfing candle, which would show that the uptrend would continue. After this, you get the bearish engulfing candle, which is showing that the uptrend stopped. Yes, that we got here now a reversal happening because this is a strong candle. Here you see selling pressure. This wick here above is selling pressure. Yes, that means there could be now a reversal happening. And after this candle, we have here that neckline, which I have explained in the ebook so often. And this neckline is the sign that this huge candle was already a sign that this next candle could be breaking the neckline and going down further. But for this to happen, it needs mostly a sign of a rejection from this neckline, yes, because that is already the first hint here, yes. This engulfing, bearish engulfing candle is the first hint that now the double top will unfold, yes. It's already a good sign, a high probability trade, yes, because you got already the initial of an upcoming downtrend, and you need a downtrend, yes, a strong downtrend to get this neckline broken by price. So let me show you this. I will explain you this again here based on those things which I have explained in the ebook. So engulfing candle, yes, and there, like you see, engulfing candle at the support level or key level, and then you can expect that a downtrend will start. That is already the start of the downtrend, yes, if you have had before a strong long uptrend, and that is in this case this kind of uptrend with a pullback, yes. So let's see what happened here. The next candle is formed, it's moving up, yes, it would be already the sign to enter into a trade. I waited to explain something, yes, and then I entered in, okay, I explained again, waiting for the rejection and the reaction of price. Then I saw the rejection and then I entered into this trade. So let me show you this. Why I entered here into this trade, I have to do play because it's important that you see the wick, yes. So wait, okay. So that was the second rejection, yes, but the second rejection happened in the purchase time, in the expiration time. That means, or if you would have waited for this rejection, it would be almost too late to enter because you were not able to enter, and you would enter on the next candle, and the next candle would be appear, yes. But what I want to show you here is that this rejection here, and you have seen how price moved, yes, this rejection here, this wick was the evidence, and that was also the reason why I entered at this level, because it pushed the price down to this level. This engulfing candle was the first sign that price would go down further, that there would be a downtrend coming up. The 20 EMA is almost also getting more stalling, yes, it's not anymore steep, yes, it's getting flat, more flat, yes, and that was the reason why I entered into this trade. So now we will see how it ends up. Price is going down because it broke the neckline. So let's see, and yes, and you see how price gone in this kind of downtrend. So I will explain this again. So here we have now, and that is what I try to explain. We have an uptrend. We got here a pullback, which was a strong pullback. That was a good sign that the uptrend is still active. We have a strong uptrend. You see also how the 20 EMA is getting steep. We got here the fact that the EMA, the 20 EMA and the middle Bollinger Band doesn't touch together. Yes, that is already a sign that that is a strong trend. Yes, it's a strong trend. If they do not touch after they are getting closer together here, they are converging, yes, and they didn't touch, yes, that means we have a strong uptrend. So you could enter also in this kind of trade, yes, because you can get really sure that the 20 EMA and the middle Bollinger Band, or the 20 SMA, which is the middle Bollinger, will not cross, yes, so fast. Yes, that is what the crossing of EMA is based on. There is a strategy which I have explained based on the 3 EMA and the 10 EMA. Sometimes the 3 EMA is not crossing the 10 EMA, and so you can trade the pullback. Yes, that means here, this not crossing means we have a pullback. Yes, if price reversed at this point and price is not crossing and they're getting out together from each other, that means almost that there is no crossing, there is no reversal happening, yes, that will be a pullback, yes, that is what I try to show you. So, and then here we have almost, that is what you have to have your eyes open. If price doesn't reach this level of the previous high, that is the previous high here. Here is no price action on the left, yes, because almost a lot ask me always, what does this mean, no price action on the left? We have no price action here on the left. That means that is a level which was not touched long before. Yes, that means that this could be a really strong level. Yes, and that means here that we have here a double top. And that is what you have expect if you see some reversal signal, and engulfing candles are reversal candlestick patterns, yes, and that's the reason why you can go into a continuation on the trade if you have some kind of evidences, because here you have all four keys together, yes. You have the candlestick pattern, which is the engulfing candle. You have the trend, the uptrend before. Then you have the key level. The key level is this level here, yes, this level, which was not reached again from this candles, yes. And then you got the rejection from this level, which was a confirmation that the neckline will be broken, yes. And the flat 20 EMA as and the stalling 20 EMA here, that is this part here, from here to here, was already showing that price could reverse there. So okay, I think that was all. I would like to explain you some more, but the video is getting too long, and so I will cut this at this moment. There would be maybe some more, but if you like this video, do a like. If you didn't subscribe, subscribe to my channel, and if you have something to say, drop me a line in the comment section. Tell me if you want to see more of them. I want to do more of them almost at the weekends, to show you and to explain you and to teach you how and why I'm doing these trades, because I get so often so many questions why I took each trade, and they have almost always a reason why I'm doing this. So okay, that was it. So if you like this video, do a like. If you didn't subscribe, subscribe to my channel, and if you have something to say, drop me a line in the comment section and or join the Facebook group. And so I would say stay safe and bye bye.